What's up, little peeps, and in this video I'll be taking you one step closer to becoming a $1 million investor by showing you how to invest more efficiently by using dollar cost averaging. But not just the regular dollar cost averaging, we're just going to invest on the upside. So if any of that interests you, stick around. Don't forget to like, share, comment, subscribe, and let's begin. Alright, so what is dollar cost averaging? Dollar cost averaging is simply the practice of investing a fixed dollar amount on a regular basis regardless of the share price, and it is a good way to develop a disciplined investment habit. However, what if I told you I could show you how to get more out of your money? Dollar cost average is really just investing high or low over a period of time. But what if you were able to just buy more of the downside than having to actually average? And this is where I created a simple Excel sheet to guide you along the way. But we'll soon get into that. The idea behind this is simple. So let's say you buy some stock at $1 today, and then tomorrow you buy some at 90 cents. And then you buy some more a week later at $1.15. The idea behind this is good. And you will probably eventually make money if the company continues to perform. However, this Excel sheet I've created will help you to gain a little bit more than the regular dollar cost average. The aim is to buy the dip as much as possible. Earlier I spoke about buying stocks at different prices and at different intervals. You need to also understand what is weighted average. And using the Excel sheet that I'll provide for you, we'll just simply calculate it for you, just put in information. But what is weighted average actually? Weighted average is simply dividing the cost of each stock purchased by the number of units each was bought for, which would yield weighted average per unit. Then you know your total amount of shares that you have over the period, which would then equal the amount of shares, and then you have the weighted average price. But before I say I won't confuse anybody else, I could just jump to the Excel. I'm going to show you exactly what I'm doing. Also, I'll ensure that I leave a link in the description so that you guys can just go on Telegram and just download the Excel sheet from there. Or you can just type in Garth's Grant YT community and then you can just join from there as well. Alright family, I hope the background is too noisy. So yeah. So this is just a little weighted average Excel sheet that I did create for you guys specifically. The full version of it is for the person who did already have more course already, so we can't necessarily just go over that. But anyways, alright, so before there's some ground rules basically with this Excel sheet. So you see the ones that have yellow mean that they have formulas in them. So the formulas in them don't trouble that. Everything is done automated. But them here now, you know, you can change them. Green, you can change them. But like instead of say you put 1 and then you go back, it'll clear it out. It'll still add up eventually, you know, but if you just get it as figure, just put 0 and then you're good. For them, you know, units are just general number. So you just put back 0 and then you're good. But I'll go back over everything now. So now say we did buy 10 units at $1. Right? So that means say your weighted average price is $1 and the total units is 10. But you can use new, current, past. Them here don't really matter. The only reason why I'm gonna put them here extra line here is that suppose you've been tracking it. So I say buy 10 units June and 10 July and so on and so forth. Them just add them extra columns here for you guys. But really and truly only might need 2. But we'll just continue. So say we'll buy 10 units at $1, and then in that same example, the following day now we'll buy another 10 units at 90 cents. Then now you have 20 units, but now your weighted average price is 95 cents. The weighted average is really just say how much, I know you can't use definition of it, but how much weight each purchase is, and then you get like a proper average. Because if you average, it'll just show say you have 10, and then right now I think it'll probably show 95 same way. But the weighted average just means is the $1 more expensive than the 90 cents, and how much units of the stronger is there compared to the weaker one, basically. So and then would have Another one, so buy 10 units at $1.15. Then now your weighted average is 1.02. And then now that's it really. And then as I say, when you finish now, you just put 0 back for all of them and then you're good. So we have 30 units right now at $1.02. And how would I do? I just put it in here, so into the tracker. So just the name of the company, just put a company XYZ, and then the fair value price. I already do a video on fair value, so if you actually find time to figure out the fair value, then you can just work towards a price there. So say the fair value is $1, you can work towards a price there. The closer you are to the fair value, the better it is for you basically. So just change this to currency. So the fair value at $1. The weighted average price for the stock as of right now, you look right here, so it's $1.02. So 1.02. It goes to BAM, and then in total you have 30 units. You have 30 units. I'll do the check. 30 units, and then the total cash, it will show you how much cash you have, the cash value, total cash value you actually spend. So total, the yellow one, as I say, you don't touch the yellow one. So total cash value spent. So total cash value spent would be this. So it's really just a simple calculation of multiplying this by this. So weighted average price plus that, and then the market price now is what price the stock is selling at right now. So say I won't go on something just as of like $1.50. The thing is color coded, so when it's in a green, you know you're not profit. This should have show say alright 48 cent per share profit you're in, and then your actual profit now is 14.4. Right here now it show you percentage change. Percentage change just means is like you're gone up or you're gone down. And yeah, so the total profit and loss is really just the sum of everything right here. So this is when you add more companies in it, and just total everything with it in yourself. But that's the profit and loss in dollars. And then the gain now is really just total percentage gain would be this and this, which as relates to the total percentage gain, it is really just B4 over B over F4. You could have probably just take out the sum part, but yeah, or you can also just do the total of this, the total of the mirror that equal it anyways. So that's that. And then as it relates to the total net value that equal just the sum of this and this in like, so your profit in money plus the amount of money you actually spend. So yeah, but yeah, this is just like, you know, Excel you can use. You can even use it to track your portfolio, come to think of it. And if you want extending to say have more stocks within your portfolio than this, you can extend it. I might just extend a bit more for you guys, but yeah, I'm just extending to everything, so now a clean sheet. So this is like a progress tracker, and yo, may the gains be with you. It's Maji, little clip art. Yo. So there's two downsides to this situation. The first one is, what if you buy the dip and then the dip dips? But that's only really an issue unless you know something changed about the company, or is a case that the company is not performing as well as expected. However, if the company is performing and the price fluctuates, then will be a good time to actually buy up some more. And the second thing is, this is a manual process. Well, this version of the Excel sheet that I sent you guys, if you're not up like 10 or 15% per stock, then the buying and selling fees that each broker charges will eat away the supposed discount that you guys got. So know your broker fees and then you'll be fine. Although right now JMB fees are low and Jane Fund Managers fees they don't have any fees on trading stock right now, so you can probably take advantage of that. And yeah, pretty short video. Thank you guys for watching. Ensure that you like, share, comment, subscribe to the proof to a friend. Yo, catch you in the next video. Peace.